morning, all you wonderful money masters and treasure hunters. Welcome to the December 12th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call the rules of the universe. You know, the universe says, number one, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, you first must sow. The universe says, number two, unless you change what you are, you will always have what you've got. Number three, the universe says the way you do anything, it is the way you do everything. Think about it, folks. The universe says rule number four, leaders are readers. So my question to you is, what was the last book you read? And when did you last read a book? You know, it isn't what the book costs, it's what it will cost you if you don't read it. The universe says, rule number five, don't say, if I could, I would. Say, if I can, I will. Number six, wherever you are, be there. So on your way to work this morning, concentrate on work, not on home. And then on the way home tonight, concentrate on the way home, not on work. The universe says, rule number seven, don't set your goals too low, because if you don't need much, you won't become much. The universe says, rule number eight, and there's 9 of them, rule number 8, happiness is not something you postpone for the future. It's something you design for the present. And finally, rule number 9, time is our most valuable asset. Yet we tend to waste it, kill it, and spend it rather than invest it. Thank you for investing your time with us here at TFNN. We are honored to serve you. Our call-in number is 877-927-6648. Give us a call, folks. We would be happy to take a look at your stock chart. Let's start off the day by taking a look at the futures markets out here. We either have seen the high of the day right around the 1784-ish range, or we're going to see that area under attack this morning. We'll talk about that momentarily. Right now, we've got the ES Mini. It's trading up, looks like I deleted something. The ES Mini, that's trading up 1 point. It's trading out at 1781. Dow futures are up 4 points, so a flat market. 15,840 is what it's trading at. NASDAQ futures up 3.5. They're trading out at 34.70. King dollar, it is on the move out there. It is up 21 ticks. It is trading out at $80. There's that correlation that I was talking about for the last several days. You've got the U.S. dollar index now up. We were taking a look at the euro bouncing into that long-term area of resistance, and you've got Goldilocks now back $23. Really taking back in 2 days all of the gains that it had off that nice little bounce. And all it did was really run into some overhead resistance out there. We took a look at it on the stock on my chart, my screen. Maybe we'll do that as well a little bit later. Silver's now back 67 cents. It's off 3% this morning. It's trading out at $19.69. Light sweet crude, that's a different story. It doesn't really care about the U.S. dollar index these days. It's trading up 60 cents out at 98.04. Of course, natural gas, it doesn't care about anything other than cold weather out there. Of course, being here in Florida, I don't know if it's cold because it's really in the 80s down here, but hopefully it's warming up in your area. Right now, natural gas, maybe you got some short covering. Who knows? It's up another 6 pennies. Trade out at $4.40. It took out the 1.272 butterfly pattern. Now, I say take it out. It's not. It was forming. It never confirmed or anything like that, and it's always important to be able to take a look at candlesticks because they're going to give you the signal whether or not some pattern may or may not unfold and which level it might move to. If we take a quick peek around the globe here right now, you've got the DAX in Germany. That's trading down 43 points. Really no big deal out there. It's off 0.5%. The FTSE down a little bit more, about 0.6%. It's trading out at 64.64, down 43 points. In Asia last night, a sea of red. The Nikkei off 173 points, a little over 1%. The Shanghai, that was off 1 point, so that was flat. And the Hang Seng down 0.5%, off 120. Let's begin our day by looking at Goldilocks. It's at the low of its trading session here right now. It's back inside that swing point from June 28th. That swing point at June 28th, the low of which is 1179.40, 1179.60, becomes your 1-to-1 A to B equals CD down. Just to show you how weak, quite frankly, that last move in gold was. It was so weak it couldn't even get up to the resistance area. It should have at least been able to have made a dead cat bounce. Dead cat bounce, we would just simply come, if you're watching us on Tiger TV, you can see the daily gold, the continuous contract that we're looking at on my screen out here. And we would come from the swing point, which would be October 28th, the high of which is 1361, and change all the way down to the low that was put in a couple days ago, December the 6th out there. Well, I take that back. It did make the dead cat bounce. I apologize for that. I won't let that happen again. The dead cat bounce was 1268, so that's all that it actually made. But it should have at least been able to have gotten to the top of that descending price channel. So to a certain extent, there is really where your weakness is inside of Goldilocks. It's going to at least go down and complete the 1-to-1 A to B equals CD. Could move lower than that. In fact, this could be setting up a larger, how do I say this? I don't know if it's a larger. It could be setting up a new A to B equals CD, because that A to B equals CD, we would actually start from that from the October 28th high at that 1361 level. In fact, let's take a look at that. So that says if, in fact, gold gets down, tests the low from June 28th and breaks that low, let's make this one a red one. That A to B equals CD, I got to scrunch. I got to use that. That's that technical term out there. I've got to scrunch the chart. That says 1074 would more likely be the target. So we'll sit, and here's the deal. The deal is right now, we were showing this correlation the other day, the correlation between the U.S. dollar index and gold. It's not on this chart. Let me switch over to a different chart out here. And unless that correlation unhinges, which it does from time to time, but right now we were just taking a look at, hey, what is gold doing? What is the U.S. dollar index doing? And that correlation was there. Where is it on my chart here? Here we go. Switch over to this tab. Was going a bit too far. So the black line that you're looking at on my screen here, if you are listening on your mobile device at TFNN.mobi or the radio, thank you so much for doing that. You can catch the live stream of the show. You can see this chart by going to the home page of TFNN.com. The upper right-hand side, you'll see a button, 3 smartphone devices. Click on that. You'll see this chart. The black line, the black squiggly line you're looking at, that's the U.S. dollar index inverted now. The reason why it's inverted is because if the U.S. dollar index is getting stronger, I want this to be inverted, meaning it would be moving down so that we can track what's going on inside the commodity. In this case here, we're taking a look at gold. And we were watching how, for the most part, this has been in unison. So it's been doing the tango out there, and it's been getting some nice marks. Well, right now we're seeing the U.S. dollar index get stronger. We're now seeing gold get weaker, and that takes us over into the queen out there. If we do take a look at the euro on the weekly chart out here, the euro on the weekly chart, as we pointed out, that's traveling right into that strong resistance area, that price channel line. It also made its way, very close to making its way up to that resistance, the horizontal resistance, which was set up by that big old bear, that big old bearish engulfing from November the 1st out here. That was a bearish engulfing that took back 1, 2, 3, 4, 5, 6. That's the dance step. It took back 6 days in one trading session. That's a significant resistance area. So up against horizontal resistance, up against diagonal, descending resistance out here. Now, with regard to where the euro actually trades down to, it should trade right back down into the bottom of its rising price channel. I can't tell you which one is going to crack first. But if the euro moves down to about 134.9, I suspect that's where it's headed to. That's nothing more. Now, this is a weekly chart that we're looking at on my screen here at Tiger TV. If the euro heads down, I suspect it'll head down there. It's a 0.618 retracement. It's also right around the top, or the bottom, I should say, of that rising price channel. So we've got competing patterns out here. Looks like it's all going to come to an apex right around eventually, not maybe, I don't know, it could go on like this for quite a while. Maybe it doesn't come to the apex until about March of 2014. But we'll take things one day at a time, one moment at a time. So that's what's going on inside of gold. That's really what's going on inside of the euro and the U.S. dollar index. Let's go take a look at high-ho silver out here. You've got the silver now trading back inside the June 28th high, which is 1963. It's right at 1963 as we speak. Volume so far today, not too shabby. Only 24,000 contracts. Of course, it's competing with and coming into a level that's got about 89,000 contracts. So the 1-to-1 A to B equals CD also takes you down into the lows of June 28th, and that looks like where it is headed to. So that's what's going on inside those two metals. Let's go and take a look at what's going on inside of the futures market out here. If we take a look at the futures market, the key, let me go ahead and put this up on the screen. We're going to focus a little bit on the 120. Now, if you were asking me, which I think I heard somebody say, hey, Steve, what's the market going to do today? And that's a great question out there. The market has a real good chance of bouncing. I apologize to subscribers because I overlooked this. I was so focused on other things, I overlooked this. And the thing that I overlooked was yesterday's one-day rate of change inside of the VIX index. What was it, 10.6% out there? Let me see if I can actually find the number here on my screen. I should still have it. Where is it? Yeah, it was 10.86. I knew there was a 6 in there, 10.86. And you know, that chart, I wish I could find it on my, it's somewhere buried in all of my tabs out here. I looked for it briefly, couldn't find it. What I can tell you, because I've done the work on it, now what I can't tell you is the percentage. I think it's somewhere, since November 12th, it's like around 80% or so, somewhere it's just north or just south of 80% when the VIX has a one-day rate of change of more than 10%. An 80% chance of at least a higher close. How high? Doesn't tell us. But a bounce could be underway. We'll go take a look at what some of those numbers are that we're going to be paying attention to, which is when I opened the show. I said we may have seen the high for the day. We'll go back and we'll take a look at that when we get back from this first break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 23 points right now. S&P down by 1.5 points. And let's go check in on our favorite currency pair. That is the euro, Japanese yen. Now, we're taking a look at a 30-minute chart here. If you are following along with us on TigerTV, we're going back and taking a look at the swing point that came in at 9 o'clock in the morning. That was on December the 5th. If we go from that low all the way to the high that was put in thus far, that came in at 2 o'clock in the morning. That was on December the 10th, so a couple of days ago. If we go from the low to the high, what we'll see is so far we haven't even made the 0.382 retracement out there. Now, does that tell us that the euro Japanese yen is strong or weak? Yes, tells us that that currency pair is strong and something to keep an eye on. Now, it has made an A to B equals CD down. If we take a look at that A to B equals CD down pattern here, that A point, we're going to use that high that came in at 2 in the morning. That's our A point. The B point's going to be 8:30 in the morning. That was on December 10th. Our C point is going to be the move up to 11 o'clock in the morning. That was on December the 10th as well. You can see it's made a perfect 1-to-1 A to B equals CD. Come on, show up here on my screen. There you go. Well, let me go back. I'll do it. It's going to be easier if I go actually right there. So there's a tool that shows multiple A to B equals CD formations on this, but you can see the 1-to-1 projection on this was 140.92. It actually got down. Well, it did get to 140.92, didn't it? It got to 140.92 at 4 o'clock in the morning yesterday, December the 11th out here. Now, if we take a look at A to B equals CD up patterns, we'd start from the swing point low. Made a little bit lower low, just a tad at 5 in the morning yesterday. The 11th, what's today's date? The 12th? I got to get my dates here all squared away. So that was last night. Yeah. No, yes, on the 11th, 5 o'clock in the morning. That low of 140.90. That's our A point. Our B point out here, that came in at 10 o'clock in the morning. That was on December 11th. It pulls back. The retracement is at 12:30 yesterday. And as it was making the 1-to-1 A to B equals CD, had some wide-ranging bars. So really wants to get up into the 141.97 level, has completed one of the A to B equals CD patterns. But when we also take a look at this, let me put this great tool out here on the screen. It's called Pesavento Patterns out there. Automatically calculates the retracements and the contractions, the expansions of swing points, the whole 9 yards. What you can see right now is we're starting to make higher highs, higher lows inside of the euro Japanese yen. You can see where price stopped here at 4:30 this morning. It was a 1.272 expansion of a swing point in the 0.786 retracement. So we did take a look at what? We took a look at a Gartley sell pattern, didn't we? Because we were looking at the A to B equals C to up. Let me show you what that Gartley sell pattern actually looks like. We'll go ahead and we'll color that in on the screen here. And what do we know about Gartley sell patterns that fail? We know when they fail, they turn into butterflies more times than not. So if we take a look at this Gartley buy pattern or Gartley sell pattern that completed, it did its initial task, which was moving back down to the 0.382 level, which was 141.52. It actually made a little bit lower low at 8:30 this morning as it got down to 141.38 out there. So the question is going to be, is 141.92 going to hold? Because if it fails, because it's worked so far. So that's the beauty. And remember, this should really be setting up an A to B equals CD down or a deeper retracement than that. So 141.91, 141.92, that's the key area, because if this fails, what does it turn into? You got that right. It turns into a butterfly, and a butterfly projection here, that would be your 1.272 or your 1 to 1.618 butterfly. The 1.272 takes you to 142.49. The 1.618, 142.92. So remember those numbers, 142, because I won't. Why? I got too many things going on. 142.49, we'll call 142.50, and 143. Those are the numbers. So now let's go take a look at the daily chart out here. 140, what did I say? 140, see, I already forgot. Let me come back over here and take a look at the daily chart. Let's put up the euro Japanese yen. Here's what we do know. The high, right now on December 10th, well, that was 142.15. And the numbers we're taking a look at, if in fact that 0.786 Gartley sell pattern fails, that says that the euro Japanese yen will rise. And if it rises, that'll be the tide that lifts all boats higher. And those boats higher, folks, those are going to be the futures markets. Those will be the indexes out there. So with a one-day rate of change in excess of 10% out here, with the euro Japanese yen doing what it's doing, what's your hedge? What is it that you believe? Is this market getting ready to fall apart, or was yesterday really a buying opportunity? I tell you what, I don't know the answer to that here. I do know that we've got some nice support here. There was a hammer candle on the 120-minute chart. That took place here. Let me get my little crosshair out here. That came in at midnight. So at midnight, the low of that hammer candle, which, by the way, is 1775.50. Hey, that's your line of demarcation. But right here around 1784, we see the ES Mini clear 1784, folks. The bounce is underway. Maybe more than a bounce. 877-927-6648. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 12 points, trading out at 15,829. S&P is flat out here. It's trading out at 1781.55. Composite up 4 points. That's trading above the 4,000 mark. The Russell 2000 is trading up 60 cents. Trading out at 11.02. Apple is up $1 right now. Google up $3. Leading the charge to the upside here, up 29%. You've got UNS Energy Corp out here. What is it? Fortis agrees to buy U.S. Energy Corp, so that's the reason it's up nice 29%. You've got, let's see here, Netflix is up $2.66. Facebook is up $1.32. Exelis Inc., XLS, not the spreadsheet, XLS, the ticker symbol up about 8% here this morning. Looks like they're going to spin off its military and government service business, so getting a boost out there. DirecTV up $1.52. Starwood Hotels up $1.77. 3D Systems up $1.20. To the downside, Lululemon leading the downside off about $4 and change, down about 7% here. SanDisk, SNDK, down 3% off $2. You've got Taminco Corp. TAM is the ticker symbol. They're down 8% out here. Immunocellular therapy. This thing looks like they've got a phase 2 problem out here. Demonstrates the live longer, huh? Well, they're out with some, looks like some good news, but man, they're getting just absolutely whacked out here. The ticker symbol TAN. Hold on. Where did it go? Was on my screen. Here we go. It's down 62%. Of course, it's like a $2 stock, so we won't really spend any time on that. My apologies for that. You've got Tomoe, AWAY, that's off 3.5%. BHP Billiton down 2% out here, so that's what's going on inside the markets as we open. If we, let's see, where do we want to start? We took a look at... did we take a look at light sweet crude? I don't think we looked at light sweet crude. So let's go finish off the commodity sector. We'll take a look at light sweet crude, natural gas. Light sweet crude here right now, trading sideways, trading out at 97.90 out here. It wants to make its run to 99.59, perhaps even higher, maybe up to the 104 range. So nothing has really changed with regard to light sweet crude. A little dark cloud cover candle yesterday, just a forecast of potential cloudiness overhead, but we'll see if, in fact, it can blow those clouds away. Considering the move inside the U.S. dollar index, with the U.S. dollar index being up 200 ticks right now, trading out at $80. Light sweet crude is doing pretty well. Bonds out here, if we take a look at the 30-year Treasury, just a sideways day out here as well, trading a little bit below yesterday's low, but not a lot of movement here over the course of the last 5, 6, 7, 8 trading sessions out there. Maybe just waiting for next week's FOMC meeting on, the 17th or so. If we take a look at natural gas, this has been the rocket ship. There's that 1.272 area, which was also, there was really two patterns that were setting up here. So here's that 0.786 Gartley sell pattern. That failed, turned into a butterfly. Now, at that butterfly level, it was also the 0.618 retracement of, this is the January contract that we're looking at. From the move down, the swing point from May 1st all the way down to the low that came in on November the 5th out there, and the 0.618 retracement yesterday or today, any day really, it's at $4.30. So you had a butterfly, you had a Gartley pattern, yet that's the reason why you want to wait for any type of candlestick confirmation out there, because you did not get that. You absolutely did not get that. That says now the 0.786, the 1.618 expansion, or the 1.618 butterfly, which is at 447. That looks to be the next target. So 447 to 453 out there, getting into that extreme, I do mean extreme, overbought condition. So maybe this last bit of move here was a short covering rally. Hard to say, but I can tell you it has gotten into that extreme level out there. So just if you're long this trade, just simply let the market take you out, but make sure you do have a stop in place. Make sure that you adjust your stops, and that is on natural gas. Let's go take a look at the other currency pairs out here. Let's go see what we've got going on inside those currency pairs. There's the U.S. dollar, Japanese yen. Here's the monthly chart. We know that is breaking out of a long-term descending price channel. If it can hold this level, doesn't get back inside there, 108.99 is really the next target once it clears the 103.60-ish range. The horizontal lines you see on my screen, those are the primary trading range boundary lines out there. So really the next one that we have to really be paying attention to ends up being that 108.99 level. That is on the weekly chart. Now, one of the things that I have done here is I've got this, it's called the Rhodes Momentum Indicator. I like the sound of that. And it's part of a scanner. It's part of a stock chart analyzer. It's the whole kit and caboodle. If we take a look at it, let me see. I've got it here. Normally I've been showing this to you on a daily, a weekly, and a monthly time frame out here. I'm going to just go ahead and cover up that area here. And hopefully if you're following along on TigerTV, I'm going to be doing a workshop. It's going to be on December 19th, so that is next Thursday evening. I believe the sign-up page will be available. I know that it will be available sometime later on today. So when that's out there, we'll make sure that you guys are aware of that, something that you'll want to sign up for. But here is the shorter-term time frame. So I'm looking at the 120-minute, a 60-minute, and a 30-minute time frame here to understand the trend, because the trend is your friend. It is our friend out here. And if we take a look at the ES Mini, that's across the top. Now, it's blown up so large that I'll try to make it large enough for you to be able to follow it on Tiger TV. One of the columns shows you the date at which time the trend actually changed out here. So if we're looking at the 120-minute chart, now you need to understand all the explanations of what this means and how to use it for your trading. That's really the purpose for attending the workshop out there. I'll explain everything to you. Charting will never be the same out here. Right now you can see on these three time frames, meaning on the ES Mini, 120-minute, 60-minute, and a 30-minute. 2 out of 3 show that we've got a uptrend that is in place. Now, the question is going to be, is that a counter-trend rally? Well, if we see the ES Mini, the first thing is close above the 1784 range, and if it does that by 10 o'clock, that'll be on the 120-minute chart. That'll be an indication that it may be more than a counter-trend rally that is in place here. Let's take a look at the NASDAQ futures. In order for this market to roll, it's going to be this line out here. It's going to be that NASDAQ. And if we take a look at the NASDAQ future, we take a look at it on these three time frames. That's the 120. That's the 60. That is the 30-minute out here. You're going to see uptrend, uptrend, uptrend. You are blue skies is the color on the shorter-term time frame. And on the longer-term time frame, you are green and ready to go. You got the green light out there. Inside the Dow on that same time frame out here, the larger time frames, meaning 120 and 60-minute. Those are in uptrends right now. Not the case yet on the 30-minute chart, but give a little bit of time here. We'll see what the Dow can eke out. The Russell 2000. The Russell 2000 futures, you got the two lower time frames. They are now in an uptrend, so we can see what is going on inside the market on the intraday basis here. You've got Goldilocks. You can see gold across the board here, downtrend, and all three of those intraday time period price trends out there. The same thing in silver. Of course, light sweet crude, we can see it's in a uptrend on both the 60-minute and the 30-minute chart out here. Of course, blue light special. Not that there's a blue light, right? Blue skies, and that is on natural gas in all three of these time frames. You can see I also have the currency futures contracts here down to the lower end here. So no matter what it is that you trade, no matter what time frame it is that you trade on, this tool here absolutely can assist, and all of the trends are included in my newsletter service, Mastering Probability. So if you haven't had a chance to check that out, now is the time to be able to do that. You'll be able to see the trends on so many different instruments, so it'll assist you in your trading styles out there. So we're going to be paying attention. Right now, we're going to use kind of the longer term, not longer term, we're going to use a longer term intraday. How's that? If that makes any sense to you. And that's going to be that 120-minute chart out here. And we're paying attention to this 1794 level. That hammer candle. So there's two things we're paying attention to. Number one is the hammer candle that came in at midnight. If we see price close below the hammer, well, that would be 1775.50. Yeah, if you're long, you're wrong out here. Now intraday, what we have seen, it moved into that first area of resistance. That's this little dash line that you see going across my screen if you're watching us on TigerTV. But if you're not, that level is out at the 1784.50 range. So that's going to be a real key number and a real key area for us to be watching, 1784.50. That has been resistance out here ever since we saw the market, really sold off hard yesterday as we were coming on at about 10 o'clock in the morning, 9:30, 10 o'clock. We saw a hard market sell-off. So that becomes a key area for us to be paying attention to, and that is on the 120-minute chart out there for the ES Mini. Of course, I could actually put that up on the screen here. Let's go in fact, let me do that. Let's go take a look at the NASDAQ underneath the same time period, because, the strength is going to be what either makes this market move higher or makes this market move lower. So if the strength has no strength in it whatsoever, well, that'll be giving us a signal. So now let's take a look at the same tools out there, same everything, and now we've got the 120-minute chart here for the NASDAQ. So you can see it's really the NASDAQ where we're going to get the Q out here. Now the number inside the NASDAQ, that number is right around the 3479 in a quarter level. We're at 34.79 even Steven here right now. So the NASDAQ is starting to beat its chest. It's starting to rear its, I don't know what a rear, where that came from, but you can see what it is with the signal that it is giving us here, at least on the intraday time period. And this will go ahead and lift all tides. So with that one-day rate of change inside of the VIX index out there, and it's a key number to always be paying attention to. Again, I do apologize to my subscribers for overlooking that this morning out there, but that's okay. It didn't really change what it is, what it is, and what we're doing and what we're waiting for inside to make trading decisions. But this is going to be key here for the NASDAQ to get up and over that hump area, which was about 34.79 or so. So that's the 120-minute chart out there. Gold and silver continuing to get whacked. Gold is now down $32. Silver is off 90 cents as we speak. So we took a look at the currencies. We got the commodities. I guess we should go take a look at some things that are popping and dropping in the marketplace. So let's go do that. Let's go see what we have going on here. Let's take a look at some things that we've got that are popping that we want to look at, maybe something new. Let's see. What is this here? Arc Group World. What are they announcing? Okay, they got a new 3D printing division out here. So let's go. Everybody's hopping in on the 3D mode. ARCW. Everybody's scurrying around trying to get those 3D printers going. ARCW is the ticker symbol. It doesn't look like a heavily traded stock. In fact, not at all. Maybe this is, in fact, not traded at all. So let me see. Let me come back and see what they actually were doing. It says ARC Group Worldwide manufacture, sells precision components, flanges, fittings, and wireless equipment in North America. Company operates in 3 segments out here, so they are going to go ahead and get into the 3D printing business. At least that's what their news release was out there. Man, the Dow just has taken a big hit out here. It's down 48 points. If we take a look at this equity, it's got a high volume high volume high out here from November 14th out. With 283,000 shares, so not a lot of volume inside of this equity, but does suggest that let's see here, was there a downdraft? Anything with volume to the downside? No, not really. So it looks like this equity here wants to get up and tag the 33 area, 33 to 43 bucks, and that is on what's ARCW? I lost it on my screen. ARCW. It is ARC Group Worldwide out there. ARC Group Worldwide. Now let's go take a look at Sarepta Therapeutics. Hey, that has hopped on the screen. That's now up 16% this morning. So SRPT is the ticker symbol. Let's go see what it is doing out here. This thing is really took a big bath. This was several weeks ago. This thing had moved down with big volume. This was 38 million shares. Really came back to the breakout area. Unfortunately, it came back to the breakout area with too much volume. This was a stock that had broke out on the trading session of October the 3rd. It did it with 27 million shares. Boy, it came back and it really closed that gap, didn't it? Did it on the trading session of November 12th, but did it with 38 million shares out here. Right now, it's trying to take out a B point of a maybe small little A to B equals CD up. That B point out here takes you to November 29th, the high of which is 1939. Volume out there is only 1.9 million shares, so it's going to have the volume today. It's already done 1.5 million shares. Let me see if there's any news behind Sarepta Therapeutics out here. No news that shows up on my screen, so it's inside the gap down out here. The A to B equals CD inside of Sarepta. Again, it's just a small one. That takes you up to about the 2750 level, 2648. That is likely where it may be headed to out here. So now we got the Dow. Let's go take a look and see what's going on inside of the Dow. You got the Dow is off 72 points out here. Let's go see what is, where's my table? Give me a moment here to find my Dow stocks. I want to see what is going on to the upside and to the downside, and we'll go check back in on the Euro-Japanese yen. So let's first do the Euro-Japanese yen while I pull up this other screen out here. Oh, we've got to wait for the break. 877-927-6648. Lead the charge to the downside, and the Dow looks like Chevron. It's down $1. International. IBM is off $1 as well. Johnson & Johnson down $1. Lead the charge the upside, ExxonMobil. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great
long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 75 points right now. S&P is down 4, composite down 4. We're certainly not seeing it in the currency pair in the euro Japanese yen. So if the markets keep this up, they'll be setting up quite a divergence out here between what's going on inside the leading market currency pair versus what's actually going on inside of the market. So that's what's happening as we take a look at that. Let's take a look at some of these stocks here that are lead the charge inside of the Dow to the downside. Number one is Chevron. CVX is the ticker symbol. So let's go see what it is doing here this morning. CVX, again, the ticker symbol for Chevron. See what it was doing yesterday. So it's been trading really in a 11-point consolidation range out here. At this stage, so far this morning, down with 655,000 shares. It's trading into the November 19th level, which had about 5.8 million shares. Yesterday, 7 million shares. So really just consolidation out here. Nothing significant that I see inside of Chevron as we speak. You've got IBM. Of course, we know IBM. Let me switch over here to my little core tab, IBM, and this is the daily chart that we're looking at. If we take a look at the pullback here yesterday, really on just normal volume, 4 million shares yesterday. It is trading right now inside of its swing point low, which came on October 21st, 172.63. Is that the number? 170? 172.57. It's really back inside of the high volume bar. It was the prior session, October the 17th out there. That low is 172.57. Got back inside there yesterday. That has 22 million shares, so it's coming back inside that swing point with lighter volume. Yesterday was 4 million shares. Today so far, trading volume 665,000 shares out there. We've got Johnson & Johnson. That's off 80 cents this morning. J&J is the ticker symbol. Let's go see what it is doing out here. See what kind of volume we're looking at. Did it gap down? Let me see if I just have to. No, it didn't gap down. I just need to update my screen out here Give me a second to do that. So we take a look at Johnson & Johnson. Let me get rid of those. Oh, come on. Don't do this to me. Delete all. There we go. Come on. Delete all. Should delete everything. Okay, so as you take a look at Johnson & Johnson here right now, yesterday did start to pull back with some volume, a bit of volume, 9.4 million shares. Now it's breaking a swing point of a potential A to B equals CD down. The B point on this is December the 5th. 92.66 is the number, 8.6 million shares. Yesterday's pulling back with 9.4. So far today it's done a million shares. So looks like we're looking at a Gartley buy pattern that could be setting up here inside of Johnson & Johnson after it finishes its work to the downside. The 1-to-1 is 91.45, but the way that it's come off of the C point out here, and if it is able to get volume of more than 8.6 million shares, would suggest to me a move down to more like 90.53, 89.40 out here. Let's take a look at the Gartley buy. Let's take a look at the retracement levels from low to high. Yeah, so 89.40 is likely where it would head to if it can maintain the volume that it's got right now. That would set up your Gartley buy pattern. That's your 0.618 retracement. That is your 1 to 1.618. A to B equals CD down. Let's take a look at Exxon Mobil. Let's go see what Exxon Mobil is doing. That is leading the charge to the upside. It's up 35 cents out here. Now, Exxon Mobil's in a 7-point consolidation breakout. Where is it? It's not on my screen right there. Son of a gun. Let me go over to another tab here. Oh, I don't know if I can do it that quickly. I'll have to do it during the next hour out there because I only have about 10 seconds. So right now, we've got the Dow is off 62, S&P is down 3, but the currency pair is saying not so fast. Folks, if you're off to start your Thursday, have a terrific Thursday. I look forward to seeing you in the morning or seeing you in about 8 minutes or so. Have a great Thursday. Thanks so much for being here. Look forward to seeing you soon. Take care. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.